As we approach the midpoint of 2024, a piece of good news about the real estate market across the Portland area is that it's been sort of boring this year. And sometimes boring in the real estate market is sort of good because historically, real estate markets weren't meant to be as exciting as they have been since, say, 2005, with the constant sense of boom and bust or impending boom and bust. For the last couple of years, things have remained a little slower than I would like to see, but prices haven't been going up or down extravagantly anywhere in town, and that's actually a pretty good thing to see. A little bit of leveling off, a little bit of seeing housing as a good long-term investment, and a little less of looking at housing as a 2 or 3 year investment and moneymaker is probably good in the grand scheme. Of course, it's just coming with some growing pains. As you know, one of the big issues since 2020 and the hit of the pandemic has been housing inventory. The amount of homes for sale versus the supply. We measure that in terms of months, meaning how many months would it take to sell everything off if nothing else came up for sale. And as of this last month, we only have 2.3 months of inventory here in the Portland area. Now that's higher than the 1.9 months we had at this time last year and 1 month we had 2 years ago, but still lower than we would expect historically. Now by historic standards, a balanced market between buyers and sellers was defined as about 6 months of inventory. Given how much slower things have been the last couple of years, you could probably argue that somewhere in the 4 to 5 month inventory right now would qualify as being balanced. At 2.3 months, we used to say, whoa, it's so seller friendly. But again, with demand where it's at and prices where they're at and affordability where they're at, still on the big scale, yes, it's a bit more seller friendly right now, but there's a sense of a little bit more balance than you would expect. Again, given affordability issues and the decrease in demand that we've seen since 2021, early 2022. It is spring, however, so we did see a 12.4% jump in the number of houses hitting the market between April and May, and an over 8% increase in the number of houses going up for sale versus May of last year. So yes, we tend to see this in spring, as evidenced by the 12% figure, but 8% over last year shows us that more people have decided that they're going to get back into the market regardless of where prices are, regardless of where interest rates are. Last year at this time, we saw a lot more people waiting. There was a lot of uncertainty as to whether or not rates were going to keep going higher, or were they maybe about to take a big drop and people would want to wait and take advantage of that. Everyone kind of sees now prices are probably here to stay, and interest rates might get a little better, which we'll talk about in a minute, but probably not drastically better as it turns out, but also probably not drastically worse. So as more people assume that what the market looks like today is not going to change a whole lot in the near future, that is going to bring some people back off the fence, off the sidelines, and back into the marketplace. That will create both more supply, obviously, as more people put their house up for sale, but this is an odd time where an increase in supply will probably also increase demand, as some buyers have sat on the sidelines for a while because they felt like there just wasn't enough available. Also, as buyers get a little more comfortable and if rates can stay down in the sixes, then we'll see a little bit more buyers re-engage as well. And in fact, as you can see here, currently we have more property available to purchase than we've had in either of the last couple of years by a pretty significant figure. And again, that's going to be helpful getting more buyers re-engaged, which will increase confidence for other buyers and other sellers, which will bring a little bit more into the marketplace as well. I don't see a big flood of houses hitting the market coming, but we will see a bit more of an increase as time goes on, some of that being seasonal, and again, some of that being people getting more accustomed to where the market's at, a little more comfortable, and maybe a little more confident that they're going to get the results that they would want. As for closed sales, those were up 13.6% versus the previous month, and 6.6% versus the same month last year. Though it is fair to note the number of sales in May of this year was still significantly below where it was in 2022. But bear in mind, at this time in 2022, we were just finishing out the sort of COVID boom. So it's not a big surprise that we have significantly fewer sales right now than we did 2 years ago. The good news is we have more than last year. And while we don't need a crazy number of sales, we don't need a crazy number of buyers and sellers out in the marketplace, enough houses for sale and enough sales kind of keeps things moving and that tends to be good for people on both sides of the transaction. Prices are also up over last year. The median, or sort of middle of the road, price is up 1.5% versus last year. Now that's good news because for quite a while we were seeing drops year over year. But bear in mind, the drops we saw year over year in much of last year and early this year, and the 1.5% increase we see right now is for all types of residential property across the entire market. Your neighborhood might be up a little bit, your neighborhood might be down a little bit. Generally speaking, plus or minus 1% is generally flat. And it's a sign that whether or not your prices are going up or down are probably going to depend on the type of home you have and where in town you are, where in the surrounding areas you are, and what's going on in the markets there. 1.5% up across the market is a positive thing. The median price last month was just over $558,000 versus $550,000 the same month last year. Bear in mind that by the end of this year, we will probably see the year-over-year median price up, I'm going to guesstimate, somewhere between 2 and 2.3%. We're not going to see the numbers start to rise in any significant fashion, but I also don't see them starting to dip again. Historically, somewhere in the 3 to 5% range of annual appreciation was deemed a pretty good figure. It's something that could go kind of indefinitely without any big changes needed. It's boring by today's standards, but boring in real estate markets isn't such a bad thing. So 1.5% is a little slow on the growth, but given how much they jumped during the COVID period, it's no surprise, and it's pretty healthy that they haven't taken a big drop. So by the end of the year, I expect we'll be at 2 to 2.2% year over year, but don't expect anything drastic. One significant change versus last year is time on market. As of right now, your typical house is for sale for about 86 days from the time that it goes to market to the time that it goes under contract. Now, bear in mind that does include some houses that fall out of contract and come back on. Unfortunately, the data continues or considers all of that time, but those are a minority in the marketplace, but they do still tip the scales just a little bit, as we have seen more sale fails this year than in previous years. Last year at this time, your typical house was selling in only 40 days. So market time has more than doubled, but that has happened while prices have inched up just a little bit. So one of the reasons we see that, and it's not common to see prices inch up while time on market doubles, is because we are again seeing a little bit more inventory, a few more houses coming up, and buyers are much more price conscious than they were 2, 3, 4, 5 years ago. So more buyers are going back to look at houses a second or third time, taking a little bit of time to shop, a little bit of time to consider their options. So this increase in market time isn't a big surprise. It also isn't a surprise that prices are able to inch up, even though it's taking longer to sell. Even though historically you wouldn't expect that to be the trend. If there's anything we've learned from the last few years, historical trends don't always match what's happening today. And the last thing, of course, everyone wants to know about is what are interest rates going to do? Well, as of now, say June 7th, rates are right about 7%. You can get a little lower on FHA, but conventional assumes somewhere right around 7%. We've had a couple buyers this last week get locked in between 6.8 and 6.9%, 7%. So we're right around that 7% figure. There were those who had predicted that it would get down into the fives, like 5.99 by July 1st. I always thought that was a little aggressive, but that was a very common prediction in January. I did think we'd get down to like 6.4, 6.5 by July 1st. That's not going to happen. The folks in charge of interest rates aren't convinced yet that the economy is performing poorly enough to make those adjustments. So expect to see rates probably right around 7% throughout the rest of the summer. We might get down to 6.7, 6.8%, but we're not going to see a big change. Now, I do think if we got down to, say, 6.5, we would again see a bit of a bump in the number of people looking to buy and the number of people looking to sell, because that would feel like a little bit of a benchmark. But I don't see us getting below 6% this year, and it may very well be well into next year that we do it if we do. An interest rate starting with a 6 is probably a pretty good expected norm for the next 12 months or more, depending on any big shifts in economics and where the Fed thinks they need to go to kick things off or continue to slow them down. if you have any questions on what's going on in your neighborhood or what the market looks like for your place, let me know. Because like I said, it's always going to depend on what kind of home you have, townhouse, condo, single family home. Are you on a farm? Are you in the city? All of these things will have some impact on the pricing strategies and the trends going on at any given time. We're looking right now as the Portland area market as a whole. Bear in mind, those numbers don't always match what's going on in an individual neighborhood. 1.5% year over year does not mean everybody's getting 1.5%. Some are getting more, some are getting less. So reach out if you have any specific questions, but just note that right now the market looks like it's probably going to look throughout the summer. Slower than usual, but not as slow as it was, with prices a little bit better than flat, but the sort of boom bust or perceived boom bust or expected boom bust should be something that we've gotten over now. You've seen fewer calls or cries in the media to get ready because the market's about to burst. The bubble's about to burst. It's not coming. We hadn't thought it was coming. I thought prices might dip a little more than they did, but so far demand has stayed high enough and inventory or supply low enough that it hasn't been able to happen. So the market today is probably what it's going to look like going forward for a little while.